And in the UK, voting in the Conservative Party leadership contest is set to close later in the session, with the next Prime Minister scheduled to be announced on Tuesday. And former London Mayor Boris Johnson, widely regarded as the front-runner in the contest, or Foreign Minister Jeremy Hunt, will succeed Theresa May to take office on Wednesday. Well, my colleague Juliana Olanka will tell us how all of these are playing out in the City of London. Hello, Juliana. Good afternoon.
Good afternoon to you too, Chimi. Nice to see you.
Nice to see you too. So how are the markets monitoring the political landscape? And Alan Duncan, the Foreign Affairs Minister, just resigned in protest against Boris Johnson. Philip Hammond plans to resign too on Wednesday.
Well, it's not looking great, Chimi. Of course, people were waiting with a bated breath at the beginning of the week, but before Boris Johnson has even been announced as the new Prime Minister, we're already seeing a cabinet revolt. We've seen that Sir Alan Duncan, who's quite a strong Conservative member, he is a leading figure in the Foreign Office, he's quit. And this is just 24 hours after Sir Philip Hammond, the Chancellor of the Exchequer, says he will resign if indeed Boris Johnson is announced as the new Prime Minister. And it seems, Chimi, for once, it isn't really about Boris Johnson's personality that seems to be dividing the Conservative government. It's purely about his policy. The October 31st do-or-die Brexit departure is exactly what most politicians in the House of Commons do not want. They've seen the warnings from the Bank of England. They've seen the warnings from the poor PMI data that Britain is having, that really isn't a step that they want to go down. And Boris Johnson has said, come what may, on the 31st of October, he will leave. But let's have a look at the numbers very briefly. At intraday, the FTSE All-Share is up 0.34%. The FTSE 100 is up 0.41%, and the FTSE 250 is up 0.12%. I think that's got a lot to do with the oil majors there. In currencies, not a good day for sterling. The British pound is down 0.27% on the US dollar. A pound will get you $1.24 right now. Sterling down on the euro by 0.30% and down on the Japanese yen by 0.13%. So not a good day for sterling yet again.
All right, let's leave politics there and talk corporate news. Britain's largest supermarket, Tesco, has increased the price of more than 1,000 products in the past 2 weeks. How competitive is Tesco's new prices compared to Asda, Sainsbury's and Morrison's?
This is quite an embarrassing story for Tesco, certainly not a story that it wanted to be leaked to the consumers. And the leaked document does say that in the past 1 month, Tesco has hiked the prices of 1,000 products, some of them as much as 152%. There was a packet of lentils that went from £1.42 to £3.60. And I must say, Chimi, customers are starting to notice, especially when we had the likes of Aldi and Lidl enter the market. They also made Tesco become more competitive, and they wanted to be, I would say, the cheapest of the big four supermarkets. But clearly this is not the case. There was a recent survey done by shoppingsupermarket.com, and Tesco ranked 5th out of 7 of the most competitive supermarkets. People valued them down in terms of quality and just how much their products are costing. So this is not a good day for Tesco. Tesco have had their fair share of bad news recently, and they have really suffered since the horse meat scandal a couple of weeks ago. But certainly, I must say, of the big four, Tesco is still seen as the biggest supermarket in the UK, but certainly not as cheap as Asda.
Perhaps they may just have to change their strategies here. Anyway, aside from politics, what's on tap for the markets this week?
Well, we're certainly in the UK keeping our eyes on the simmering tensions between Tehran and Britain. Oil prices are really on the rise, and they're pushing up those FTSE markets. I must say BP, Royal Dutch Shell and Premier Oil are doing very well, and the market traders are keeping a very close eye on them. We're also getting results coming through this week from ITV, Vodafone and GlaxoSmithKline. Lots of people are going to be looking at how ITV are doing, particularly as they've just launched their streaming box service with the BBC, so we'll be keeping a close eye on that. And I must say, Jimmy, it is is a week where lots could happen or lots could not happen. We spoke about it at the top, but politics is really what will be dominating Britain. So I'll keep an eye out for that and keep you posted during the week.
Definitely. Let's keep an eye on those developments, of course. Thank you, Juliana.
Thank you, Chimi.
And in Asia, stocks were lower on Monday as shares on a new Nasdaq-style technology board on the Shanghai Stock Exchange skyrocketed on their debut day. In mainland China, the Shanghai Composite slipped 1.27%, while the Shenzhen Composite shared 1.785%. The star market started trading in Shanghai on Monday as shares of the first batch of 25 companies surged following a massive oversubscription prior to their public debut. Over in Hong Kong, the Hang Seng Index slipped 1.2%. The Nikkei 225 in Japan declined 0.23%. And in the U.S., stock index futures rose ahead of a big week for earnings. The gains came even as expectations of aggressive policy easing from the Federal Reserve dampened. At around 6:48 a.m. Eastern Time, Dow Jones Industrial Average futures were 62 points higher and pointed to a gain of 19 points at the open. Futures on the S&P 500 and Nasdaq 100 were also marginally higher. Now, more than a quarter of the S&P 500 reports earnings this week, including so-called FANG names Facebook, Alphabet, and Amazon, along with blue chips like McDonald's and Boeing. For second quarter earnings reported so far, 79% of S&P 500 companies have topped earnings results. Now, so far, more than 15% of the S&P 500 has posted quarterly results. Of those companies, 78.5% have topped analyst expectations for earnings, while 67% have reported better than expected quarterly revenue. And back here on the African continent, InterSwitch, a Nigeria-based payment firm, has hired advisors to resurrect plans for a stock market listing in London and Lagos later this year. The JP Morgan Chase, Citigroup Incorporated, and Standard Bank Group Limited are among the firms working on an initial public offering which may value the financial technology company at $1.3 billion to $1.5 billion. InterSwitch, owned by private equity firm Helios Investment Partners, has engaged with banks in recent weeks after a thwarted IPO attempt 2 years ago. The potential IPO would come on the heels of two other major African and Middle Eastern tech company share sales this year. Jumia Technologies, listed in New York earlier this year, while Dubai-based payments firm Network International Holdings PLC went public in London. And after the break, we'll bring you more update from the equities market as well as latest from South Africa. To stay with us.